On Business Incorporated today, the Economist Intelligence Unit warns that 7 African countries will have high debt servicing in 2023. The first consignment of gold for oil to arrive in Ghana on the 10th of January 2023. And World Bank releases $100 million for Zambia economic support. Good afternoon. Welcome to this episode of Business Incorporated here on Channels Television. I'm John McCall. Let's start off with market numbers with major African markets that we track. They're mostly in the positive at intraday, except for South Africa, which is in the red. Nigeria is marginally up 0.01%, while South Africa is almost 0.5% down at intraday. Egypt is very, very good for intraday, 0.77% in the green, while Kenya closed yesterday 0.5% in the red. We move over to the Middle East, where it seems like it's a flip there because most of the markets are in the red. Abu Dhabi is in the red, 0.50% at 10,312.99. Dubai also in the red, 0.26%. And Saudi Arabia in the red, 0.23%. Qatar marginally down 0.08% for today. Moving on now, we go to Europe, where Germany's first liquefied natural gas terminal has started receiving the critical fuel. It's a milestone for the country, which is raised to build infrastructure for alternatives to Russian pipeline gas. We have joining us with the details, Stephen Bertsley now from Berlin. Hi, Stephen. Good afternoon. Well, this is a big deal. We've been expecting this for some time now, but does it mean that German energy supplies are now secured?
Yeah, not by a long shot. The country still has to find that gas on the markets or through long-term deals, and that has proven difficult. However, that's not to diminish that this is an accomplishment. This is the first of an expected 5 LNG terminals that are going to come into place in Germany over the next year. That's what plans call for. LNG, liquefied natural gas, is natural gas that's been super cooled to a liquid state to make it easier to transport. It has to be regasified once it reaches its final destination, and there's a specific kinds of infrastructure that's necessary for that. That's something that Germany to this point has lacked. It's been heavily reliant instead on gasified gas coming directly through pipelines from Russia. Now, we've seen over the past year what that has meant after the war and after EU pledges to quit Russian natural gas. What we saw in Wilhelmshaven is the first of, again, those 5 expected terminals. It's entering a test phase right now and is hoped, the government expects it to be in full operation by the beginning of the year, January, I should say, along with potentially 2 of the other 5 coming on, and then the other 2 coming on later this year. Or next year, I should say. The question again, where's that gas going to come from? Germany has had been making ad hoc purchases from the U.S., from other nations. It has a long-term deal that it just sealed with Qatar, a 15-year deal for liquefied natural gas shipments, but that's beginning in 2026. We know that that market is very tight. We know that prices often rise very high, and that global demand for LNG is quite high right now. So that means that buying on the spot market is going to be difficult. Even if Germany can get that gas, the capacity that is created through these 5 terminals represents only about 1/3 at most of the German appetite for natural gas that we saw in 2021. That means that even if you consider that consumption is probably going to go down as they find alternative fuels, that it's still not going to cover that entire balance needed for natural gas. So it's going to have to rely heavily on other partners, including Norway, including Belgium, including the Netherlands next year as Russia falls off more and more as a deliverer of natural gas. And that's going to be hard. Many experts saying that next winter, filling up those gas reserves is going to be even harder. Prices could be even higher than they are now.
Yeah, especially when we look at the U.S. now trying to fill up its own stockpiles of oil. But this has also received criticism about how quickly they're building the terminals. What are they saying?
Yeah, there's been criticism. There's also been celebration on some sides that it took only 10 months to build this first terminal in Wilhelmshaven. Things tend to move cautiously when it comes to big projects here in Germany. There's a thorough process that requires buy-in and certification from multiple public agencies, but also there's a very large environmental advocacy here in Germany that can make itself felt through courts, by challenges to the certification process, and that means that many certifications for large projects, even for, in theory, environmental projects such as wind turbines, things that have to do with climate, that they have been delayed and bogged down for years at times because of challenges based on habitat destruction, habitat endangerment, things like that. And it's not to diminish those concerns, but that is something that tends to slow the rate of progress here. And so there are environmental concerns naturally around this as well. Critics saying that putting these terminals in sensitive tidal areas is a risk because there could potentially be a leak of chlorine, which is one of the chemicals used in the process to transfer that gas. If that happens, then it could really endanger the ecosystems and some sensitive species, including whale species. So this is a challenge for the government to convince people that this is safe. At the same time, they were able to get this going at a much faster rate because they said this is a national priority. And so on the other side, proponents of wind turbines, of solar modules, of people who are trying to see more of a renewables build out say it would be great if we had the same urgency for these projects and they weren't bogged down all the time by challenges.
I wonder, has the market reacted to this in any way?
European markets beginning the day slightly up, trying to continue that positive sentiment from yesterday when they were largely buoyed by positive results from FedEx and Nike, and investors encouraged to buy similar stocks here. There's also some attempt to get away from the negative sentiment in recent days over central bank activities, especially that surprise from the Bank of Japan, in which it suggested it was going to put an end to its ultra-loose monetary policy. We're going to see activity likely drop in the coming days, of course, because of the Christmas holidays. London Stock Exchange, for example, open only for a half day tomorrow, but right now everyone is trading. Slightly up is what we're seeing, and also on a positive consumer confidence report out of the U.S. Sent stocks up there in the U.S., also Asia, also in a positive sentiment, and we expect to see the same here in Europe.
Thank you so much, Stephen, for that update. We'll talk to you tomorrow. Staying with the markets now, Asia Pacific shares traded higher on the optimism at Wall Street as stocks saw a boost from upbeat earnings and a strong consumer confidence reading. Hong Kong's Hang Seng Index rose 2.7%, with property and technology stocks leading gains. Looking at the number there, the Nikkei 225 in the green, 0.53% at over 7,000. Shanghai Composite in the red, 0.46%, 3,054.43. The Hang Seng Index very, very good at 2.71%. This is good market for them. Now, Kospi also in the green, 1.19% at 2,356.73. And for Australia, AX 200 in the green, 0.53%. We'll move to the United States now, where stock futures were muted in early trading on Thursday as traders digested a sharp rally from the previous session. Stock futures tied to the Dow Jones Industrial Average fell 27 points. S&P 500 and NASDAQ futures were also lower. There you have it, the futures all in red for today. The Dow Jones down 0.20%, S&P 500 0.17%, and the NASDAQ 0.14%. Now, all 11 S&P 500 closed down as concerns of consumer sentiment hit that market. Now, oil prices climbed for a fourth straight day on Thursday, with U.S. crude, heating oil, and jet fuel stocks growing tighter just as a wintry blast hits the United States. Brent crude futures gained $1.42, which is 1.7%, to trade at $82.62, and that's extending gains of around 2.7% from the previous session. U.S. West Texas Intermediate crude futures was up 1.34. $1.34, that's 1.7% also at $79.69 a barrel. Both benchmarks contract jumped on Wednesday after government data showed U.S. crude inventories fell by much more than analysts had expected, posting a drop of 5.89 million barrels for the week ended December the 16th. Distillate stocks were, including heating oil and jet fuel, also declined, going against expectations for a build in which PVM analysts calls an overwhelmingly price-supportive stock. Jet fuel consumption is also expected to pick up with a post-COVID boom in travel for the end-of-year holiday season, although transport fuel demand might be reduced if the storm keeps people from traveling. Demand worries, however, stemming from China's COVID-19 surge and fears of a global recession may keep oil futures in check. We're still in the markets now. Gold edged up on Thursday, helped by a softer dollar in holiday-themed trading, but prices moved in a tight range as market participants await economic data for further direction. Spot gold rose 0.2% to $1,818.40 per ounce, and U.S. gold futures was also up 0.1% at $1,827.70. The dollar index was down 0.2%, making gold cheaper for holders of other currencies. The U.S. gross domestic product data for the third quarter and weekly U.S. jobless claim expected later on today, and traders will scan the personal consumption expenditure data, which is scheduled to be released tomorrow. Spot silver gained 0.2% to $24. Platinum was also up 0.9% to $1,007.13, and palladium was flat at $1,692.38. Let's leave the market and go to countries now. The World Bank has announced the release of $100 million to support Zambia to stabilize its economy. The concession credit is the second tranche of the World Bank's $275 million concessionary development policy financing for the country. It's approved by the Board of Directors on the 25th of October in support of Zambia's reforms to restore fiscal and debt sustainability and also promotes private-led growth. The bank's concessional disbursement in 2022 was providing strong support for and in recognition of the efforts of the country to reduce fiscal deficit and implement reforms. Let's take a break now. When we come back, we do have more stories for you from the African continent and one conversation. Do join us again. You're welcome back to watching Business Incorporated here on Channels Television. Well, let's start with rail. Botswana Railways and Zimbabwe's National Railways have signed an agreement to improve the efficiency of services provided by the two railway administrators. The cooperation agreement will allow locomotive movement from both administrations to cross borders and deliver goods to Francistown and Zimbabwe's second largest city. The new agreement paves the way for a seamless and borderless operation where cargoes will be transported from their source to their destination using a set of rolling stock to a certain extent before another party takes over to complete the journey. Since 1987, the two railway administrators have worked together on bulk freight and passenger train services. Let's look at commodities now. Nigeria is the world's top producer and consumer of cowpeas. That's beans. Beans, that's what we know it more as. Well, the country's production accounts for over 46% of global production and 48% of total African production. However, Nigeria still has deficits of 500,000 metric tons, and so it has to import. This, of course, is another way our import bill is increasing. Meanwhile, the NBS has recorded a 17.95% increase year on year in the average price of a 50-kilogram bag of beans to 28,000 in October. A reflection, of course, of what has become normal now, elevated food inflation and food prices. Let's have joining us now to help us understand this implication and perhaps understand the source of it much more. Miriam Ode is an analyst with Financial Derivatives Company. Hi, Miriam. Good afternoon.
Hi, Annie. Good afternoon.
Yeah, so as in most cases, we do have Nigeria as a top producer, yet we are still importing. Not a very happy picture or pretty picture that was there. Why do we still have this strong demand for it? Is it because the alternatives have increased? I mean, I know at one time the demand for beans wasn't as high as it is now. Is it alternative to rice now or something?
The demand for beans, as you said, is still strong despite the higher price of beans in the country. And this is mainly because beans can be considered a gifting good. Gifting goods are goods which the demand increases as price increases, which is not common. So as price of beans is increasing, we can see that consumers would rather reduce their consumption of other jointly demanded goods with beans in order to increase their demand for beans, since disposable income also comes into play here. Disposable income is falling due to the high level of inflation in the country. So the consumers can buy whatever they want to buy. You have to buy what your pockets can afford. So we see consumers shifting their demand towards mainly towards beans. It's also important to note that 40% of the Nigerian population have diabetes and hypertension, and beans is one of the recommended foods for these patients. So we don't expect them to switch from beans to other commodities just because they're priced.
All right, so in 2015, the European Union banned beans exports from Nigeria because of high levels of weevils and insecticide chemicals in the products. Has anything been done about this? We know that the government has talked about a lot of intervention programs that are supposed to support farmers and all of that. But do we see this ban coming to an end anytime soon? Does it look like Nigeria is ready for exports of beans?
Nigeria currently exports beans, and the federal government still has done different things in order to increase not only the quantity of beans but also the quality of these beans. One of such programs is the Anchor Borrower initiative, which has been put in place in order to incentivize the farmers to increase not only their production but also the quality of these beans. Beans is very prone to pests, even at all stages of its lifespan. So it's very important to pay attention to these pests in order to reduce the effects they have on the supply of these commodities. So yes, the government has done this anchor growers program in order to boost supply and the quality of these beans. But there are also other factors that are affecting the production of quality beans, such as the insecurity level in the northern regions, which are the regions that produce the cowpeas. So yes, Nigeria has high export potential. But as I said, we are the top producers of cowpeas. But these factors, the insecurity level, the most of the farmers are small scale farmers. All this will continue to weigh on the supply of quality beans in Nigeria. But there's still hope. The ban can still be lifted in the near future.
All right. So last year there was the United States and Nigeria had that special beans outreach program. What's the update on that?
The Institute for Agricultural Research in Nigeria has already said just recently that Nigeria stands to gain 46 billion naira, sorry, 46 billion naira from the introduction of these genetically modified beans, simply because these beans can increase crop yield, that's beans yield, by 25%. And also the genetically modified beans reduces the need for pesticides by farmers, which would save them at an average 16 billion naira yearly. So the genetically modified beans is helping farmers or helping the economy by increasing farmers' income, while on the other hand increasing crop yield. So we see supply increasing, and we still see farmers being more motivated to produce more. So this can reduce the demand deficit of 500,000 metric tons in the near future.
All right, Miriam, thank you so much for that information on beans. We know more about it as we eat it now from today. Okay, so let's move on now. Ghana and 6 other African countries will grapple with debt service burden in 2023. That's according to the Economics Intelligence Unit. The countries, Tunisia, Egypt, Congo-Brazzaville, Zambia, Zimbabwe, and Mozambique, have enormous amounts of debts relative to gross domestic product, and this may eat up a substantial share of their revenue in 2023. In its Africa Outlook 2023 report, the EAIU said that the public sector debt GDP ratio will remain above 60% for Africa in 2022 and 2023, and some African countries will far exceed this level. We're staying in Ghana now. The country's parliament has approved an amendment to the Electronic Transaction Levy, the e-Levy Act, that was just launched a couple of months ago. During the presentation of the 2023 budget, the government announced a reduction of the e-Levy rate from 1.5% to 1% and want to remove the daily non-taxable threshold of 100 cedis. Government sought to make the levy applicable to any amount transferred electronically. The minority subsequently declared their stance to object to the removal of the 100 cedis threshold. However, the bill, when submitted to the House for approval, had excluded a section. And we're still in Ghana. We see that the country will have the first consignment of the field under Ghana's Gold for Oil deal that will arrive in the shores of the country in January 2023. According to the Deputy Energy Minister, this was disclosed that on the 10th, 11th, and 12th of January, the first consignment of the finished product will arrive from the United Arab Emirates. The Gold for Oil barter deal will see the country getting cheaper fuel in exchange for gold. Prices of fuel expected to go down further after the cheap fuel is introduced into the country. Well, that's how much we can take on Business Incorporated today. I hope it's been worth your time. We'll do it again tomorrow. I'm Ini John Mekwa. Enjoy the rest of your day.